Altcoins, Bitcoin, the whole damn market is going to pump a lot harder than what you might expect. But the issue is it might end a lot sooner than you might think as well. You see, what I thought would be a very simple video, me touching on the fact that Bitcoin spiked up to $64,000 and why altcoins might soon follow, I never expected that I would fall into a massive rabbit hole with the content I'm going to share with you in just a few moments here. That took me on a complete left turn to what I'm expecting out of the crypto market. Now, the question possibly popping up in your head right now is, do I need to be fearful and is this urgent? Well, actually, for both of those questions, I'm going to say yes. It is urgent because this is something that will happen a lot sooner rather than later. So there is that short time horizon. And I actually genuinely do believe you need to be a little bit fearful, as am I. As I mentioned, this led me down a massive rabbit hole. I'm not trying to scare you here. I gain nothing from you being scared. I'm just simply trying to give the urgency in this introduction as to why you need to pay attention, okay? And so just absorb it, think about it for a second after you watch the whole video, and leave a thoughtful comment down below to weigh in on what you believe after you see some of this. Now, truth be told, this is one side of the story. As in everything in life, there is two sides to the story. And as a good investor, we have to sit right smack bang in the middle. So don't make any sudden changes to your portfolio. Let's see what happens over the next few months here, and I will most definitely keep you guys up to date. Now, about a month ago, I put a poll out on my channel asking my community, mind you, 9,000 people over here, what their current position in the market is. Do you hold more cash or do you hold more crypto? And the results speak for themselves. Most of my audience are more in crypto than in cash. Now, I'm not going to give a direct answer from this. I just wanted to have this in the back of your mind before we actually start diving into the data. Now, let's begin by reminding ourselves of what the next biggest event in the market is. Typically in crypto and in any market, we're always looking for that next big event to build hype around or to be fearful of. And one that you can kind of be a little bit fearful and also hyped about is the Bitcoin halving, which typically is an economic event that, of course, drives up natural demand for the price. But, of course, there is this event that happens where immediately after, could be about a month or a month and a half, we find that the price actually falls in Bitcoin, thus bringing the whole entire markets actually down as well. Here's the thing, though. A recent report came out from one of the industry's largest mining farms, Riot Platforms, and they listed about 13 different issues that have arisen or may arise that might impact the price of Bitcoin, because it impacts them and other mining pools as well. Now, they kind of disclosed two main points that have really been brought up in this particular cycle, which is a chip shortage that goes into making the ASIC or specific built miners to mine Bitcoin, and also the increase of ESG narrative and all of these issues that have come up because everyone's so, conservative about the environment, which is for a good reason, I guess, right? And so one of the things they mentioned here is new legislation and increased regulation regarding climate change could impose significant costs on those guys and their suppliers as well, the whole supply chain, including costs related to increased energy requirements, capital, equipment, and environmental monitoring and reporting. So basically, the cost that goes into the whole operation, right from making the machines, right to actually running and using them, is going to increase, okay? Reporting, filing, hiring new people, the list goes on. And of course, a reduction in chips is bad for these guys because these guys need the latest and greatest machines to keep up to speed with demand. That's how this industry works. They are only mining Bitcoin for $23,000 a pop, which is almost a 3x increase in price straight away. So no matter how much impact that they currently are facing, they are still substantially in profit. So I don't believe we're going to have the same event where the price of Bitcoin in the whole market slightly dips based on this halving event, which is signified over here by this drop in this line. You can see right here, we kind of fall before or just after the halving event. Over here, you can see that. And in the latest cycle as well, we actually fell, of course, because of COVID. Now, here's where things take a pretty big turn. Upon researching this video, I began at this chart right here, which pretty well just shows us what the last few cycles were like, plotted on a time frame and shows you the percent increase. Now, if we kind of look at the very, very first one over here in orange, this one, of course, is the most rapid and ends the soonest because blocks were coming out a lot faster, there was less congestion, and of course, the price was much more explosive because it was a much smaller market. As the cycle after shown, still explosive, of course longer because it was more demand in it. Cycle 3 was a 2018 cycle, and then of course we have the one we're currently in right now. Now, if we get rid of Epoch 1 and Epoch 2, those first two 4-year cycles, do you notice a pattern here? We are eerily similar to what it was in the previous cycle. I mean, we had its all-time peak basically at the exact same time. We had this massive fall down of the price of the whole entire market. Again, this is just Bitcoin here. And then we, of course, hit a bottom at roughly the same time. We came up at the same time. We came down together, and we kind of came up together. The only difference here is the fact that we, of course, had COVID in that blue line of, cycle before this one that pushed prices down substantially. I have said, and many other people agree, that if COVID never happened, that wouldn't have happened. The cycle would have likely continued like we are seeing right now. And I can kind of reflect this on the chart right here. The orange line is the 200-day moving average for Bitcoin. And I believe, and I strongly do believe, that we would have probably touched or come close to this line and then bounced off in a very similar way as to what we did just over here recently. Okay, we would have probably come close, fallen down, got near that 200-day moving average, and then we would have come up. Now, I don't expect us to have come up as fast as what we have here. Nevertheless, I do think it would have been a very similar story like we can see in this case. This situation with COVID definitely put that fear in the market and took a lot longer for us to kick back. Remember, it was a global pandemic as well at that time. Now, a few days ago, I showed you this chart, but I thought that we would, roughly speaking, be about here in the takeoff phase. Now, I actually think we're probably a lot sooner to this initial pump than what we might expect, okay? This initial first sell-off, I think, actually was the situation over here, okay? I think it was this little dip that I kind of showed you moments ago, where in the previous cycle, we sort of touched that 200-day moving average, and more recently, we kind of came very close to. I actually think that was the recent bear trap. I could be very well wrong. It might be playing out right now, but I think you're possibly putting a little bit too much emphasis on the Bitcoin halving. Like I saw this report here, and I'm going to emphasize this really is a report from credible, full credit, no pun intended, to this gentleman. People understand the Bitcoin halving is actually a situation that is, yes, where prices begin to increase, but that's universally understood. Yes, it has an economic impact on the price over time, and yes, it creates a supply shock, but everyone knows that. It's a self-fulfilling prophecy. Therefore, markets don't really fall exactly in line with the halving anymore, right? Money comes into it a lot sooner, as we're now seeing, than what initially is anticipated. And everyone right now is like, oh my God, Bitcoin, how are we almost at all-time highs before the halving? Well, I actually think, as does Credible, that this is all to do with, of course, this general siren mentality around the world that people are, hey, Bitcoin's about to have the halving, let's buy in now. Let me read this quick tweet here that he recently posted back in December that I think is going to open a lot of your eyes. Still fully expect a new all-time high on Bitcoin in Q1 of 2024. In any case, it's clear that the next major leg up has begun. Keep in mind, this was December 2023, 2 months ago. And for those who are still in denial, it will be even more clear and undeniable in a month or two. Interesting, right? In the coming months, I expect further continuation upwards at a more aggressive pace than we've seen so far, as we build up to what will be a blow-off top for the books to conclude this multi-year cycle. Now, he says, as per my full thesis below, which really is, it's a massive, massive document, he expects Bitcoin to break $100,000 by the end of this parabolic run to sometime around mid-2024, and for us to be well within the first major secular Bitcoin bear market by 2025, catching most off guard. And that's what I'm sort of saying, guys. I'm not saying Credible is some god that we should all bow down to, but this guy's been predicting this in this report back from July the 2nd. I will leave it down below. He was saying that this was going to happen way back then. Now, he's kind of not being exactly on time. He's kind of reconfigured his time horizons in this somewhat recent tweet back in December, but I think he's onto something. And so, of course, this led me to further touch up on what might actually be at play here, rather than just taking his word and my brief, what might possibly happen here, as the be-all and end-all. And so what I found was, looking back at the 2018 cycle, from the very, very top, it was 24 months until we had the actual first kind of little dip here, as I kind of show you in red, ignoring COVID, right? If, again, COVID never happened, we had this sort of moment where it was like this, like it, again, typically and historically should have been, well, it would have happened about 24 months from the top to that point in time. Now, if we have a look in the latest cycle, from that 69,000K Bitcoin over here in 2021, it would have been 22 months. So only a 2-month difference between the most recent sort of dip that we did have. And of course, now we really only had this point in time that's only really been that so-called bear trap that can kind of be pointed at in this case over here. Okay, so it's all kind of leading up to the fact of making me strongly do believe that we have already had that sort of bear trap moment over here. We've kind of had the moment where, what would have happened in the 2 previous cycles if I kind of populate them over here and get rid of the most recent one, this sort of blow off top moment and then this consolidation period over here before another little dip and then the cycle continues. Now we can also support this by another chart over here from BitBo, and notice that even a month ago, I actually covered this report a few times myself. This accounted for the crash in the market with COVID, right? We could see here this takes the last 4 years, right? The last cycle, and plots it on the next possible 4 years. And it considered that we would have a massive crash based on that crash we had down here from COVID. Well, of course, we are now over that hump. At least this report also does agree. Okay, so we're now over that hump, and it's nothing but positive prices from here. Let me reiterate. We are over this hump, okay? That's been said and done. So we're now looking at what prices would have been in the last cycle without COVID included. So for all you analysts out there looking at the last cycle going, we should have this crash. Guys, the crash has been and done. Like I showed you over here. That happened at this point. So what's next? And it's interesting because the Google trends, right? The Google searches for Bitcoin and the crypto market in general really hasn't had a massive peak. We can still see here that we were higher back in the last cycle, but I actually think this will have a sharp increase very, very soon as the halving actually does happen and people really do flock into the market in general. Now, we also have, of course, the ETFs behind us, which has seen a massive amount of inflows recently. As you can see, pretty well apart from the initial dump over here from the net outflows, we have been nothing but net inflows. Definitely positive, and it's just crazy the fact that at the current rate, annualized, we'll have about 6.7% roughly of Bitcoin in the hands of these ETF issuers, and likely a lot more considering these institutions will come on board soon here. Also kind of pointed out by this chart, most of the public should feel confident in Bitcoin when they really see prices pumping. Now, this also makes me want to point out the fact that a lot of influencers out here are saying, hey, a path to alt season, this chart right here is the bee's knees. This, I believe, isn't something that you want to follow as a guide. You don't want to follow this and follow the money. You don't want to buy into Bitcoin, Ethereum, It's more so an indicator of what actually is happening at a given time. And something else I wanted to say about this as well is that because of these ETFs, we're going to find money comes into the market strictly via an ETF, which means it doesn't actually follow this waterfall effect where these guys sell their Bitcoin, buy Ethereum, buy large cap, so on. Doesn't work like that. Now, these guys are going to bring overall interest into the market by pumping the price of Bitcoin, and we're going to have people coming into the market via traditional measures that will then do that sort of method. But I want to, again, remind you all, this isn't something that you should follow as a guide. This is what dumb money follows, chasing their tail, chasing the market. You want to position yourself in coins to take advantage of the pumps that do come follow this. Again, it isn't so much as an instruction or as a guide, it's an indication of where we are in the cycle. Now, I wouldn't take this information on board and make it the bee's knees. Do not panic if you are someone who is in more cash and crypto right now. Listen to this and just play in the smartest possible way. Everything you do is a risk to reward. Crypto is pretty well on that point more than anything else, right? So, would you jump off a cruise ship in shark-infested waters as a deb? And this is actually genuine, this is a real story. Someone did this, right? Well, the reward is to look cool in front of your friends, and the risk is to be eaten alive by sharks. Now, in this case, the risk far outweighs looking cool, in my opinion. Okay, everyone else is different. You'll be late to work, for example, so you decide to speed, okay? Well, in this case, the risk is having a car crash or being pulled over and fined, with the reward thankfully being you're not late for work, your boss doesn't yell at you. In my personal opinion, the risk still far outweighs the reward. So, personally speaking, we have to analyze the current market and think to ourselves, being more in rather than being more out is likely far more favorable. With the information I've shared with you, yes, that definitely supports what I'm about to say here. But I think irrespective, I made videos the last 2-3 months, guys, saying that I believe a 60 to 90% in and 40 to 10% out, somewhere between there, is much better. That's playing the risk to reward in the right way. And again, it's played out in favor of this. But even if we had a massive dump in the market, it still would have favored this method because the money you would have made, like I say over here, buying at a discount would have made up for you buying at these highs, or at least the highs in the last few months. So here's what I would do, and I'm doing myself, but I would do if I was you in the most non-financial way possible. Say you are someone looking to get into crypto, right? Follow a DCA structure. If you get paid twice a month and you get paid $1,500 a pop, right? Take out all your expenses, living expenses, leisure, and savings. Have some savings for the real world, and you might be left there with $500, right? You might be left there with 1/6 or whatever that is of your entire monthly income. Take that $500, split it into stables and DCA, okay? Go to CoinMarketCap, create a watch list like I have over here for my main watch list. Have all the coins you want to get into, click the 7-day and find the ones that are down the most and look to dollar cost average into them. It's very, very simple. If any of your coins are inside your buy zones, why not DCA? Very simple. If no coins are in your DCA level, simple. Either add to your stable holdings or just simply lower your ROI target, okay? So you might be someone looking for a 30x like I once was. If you take into consideration all of this, right, if you can work out, okay, well, I'm going to have $500 to invest in a crypto over the next, maybe 4, 5, 6, 7, 12 months, however long the cycle ends up going for, work that out. Work out what that might allow you to do in terms of investment, bringing down how much you need to actually get out of the market like I've done, which means that you might be able to achieve your goal with less multiples because you have more money in the market. Also, I would highly suggest you consider staking. Not saying everyone should do that, just consider it, okay? So, with that being said, everyone, thank you for watching this video. I know it might have panicked some of you, but I think the main goal and my intention behind this was to show you what might actually be playing out, because I don't really see anyone really talking about this particular thing in the market right now, just sort of saying, hey, we're going to have a $600,000 Bitcoin, when in reality, we might only have 120K Bitcoin. It just might come in Q4 of 2024. Thanks, guys. Talk soon. Bye.